In this video, Peter Schiff was on the news to discuss the Fed's attempt to fight the inflation it caused. Peter said we haven't seen peak inflation, and on top of that, the recession will get worse. The reporter opened the discussion by asking, is inflation in the rearview mirror? Is the coast clear for equity investors? Peter said, not at all. Consumers got a reprieve for a month. High prices didn't get any higher. I mean, they didn't drop. But how many times last year did all the experts come out and proclaim that we had just seen peak inflation, only to see new peaks a month or two later? And I think the same thing is going to happen this time. I don't think 9.1% that we got last month is the peak. I think we're going to take that out. It may take a few months to do it, but we will do it, says Peter. The other panelists generally agreed. Weisberg said any good news on the inflation front is catnip for the markets, and he thinks the optimism is premature. The reporter then asked Peter if he was willing to give the Fed any credit for hiking rates and tightening monetary policy after the ridiculously low emergency levels. Peter said, absolutely not. I'm not going to give credit to the Federal Reserve for trying to put out a fire that it lit. And by the way, they're not even putting enough water on it to put it out. The Fed should have raised interest rates a lot more than it already has. And it should be raising them a lot more. It's gone much too slow. And not because the economy can handle it. It can't. We're already in a recession. They just want to ignore that. The recession is going to get worse if the Fed continues to raise interest rates. But it shouldn't stop just because it's going to put the economy into a depression or create a financial crisis. It has to do that. The only way to fight inflation is to remove all the inflation from the economy that the Fed put in there. So, they have to shrink their balance sheet. They have to let interest rates go way up. They have to force the government to slash government spending. But unfortunately, none of that is going to happen. This recession is going to get much worse, and Powell is going to pivot in defeat. He's going to focus his attention on trying to stimulate the economy and let inflation run out of control. Now, let's get right to Peter Schiff.
No, well, the data isn't lying. We have fewer people working than we had 4 months ago. You know, Biden claimed that we have a record number of people in the workforce. He was mistaken. He's wrong. We had more people working 4 months ago than we have working now.
Okay, well,
by the way, the record high for the number of people working is before the pandemic. So even though we've recovered the jobs that we lost prior to the pandemic, it's only because the same people have multiple jobs. We haven't recovered the workers. We still have a lot of workers that were working prior to the pandemic that haven't rejoined the labor force.
Okay. I want to come back to the financial crisis that you mentioned earlier in the interview. But first, another juicy tweet you made earlier in this in August last week. You said that there's no trade-off between inflation and economic growth. Real economic growth increases supply, holding prices down. The problem is that our economy hasn't had real growth thanks to the Fed. It experienced an artificial bubble. To fight inflation, that bubble must be popped. Just going back to the first part of your tweet, Peter, there's no trade-off between inflation and economic growth. The Fed's talking about a soft landing, which is a trade-off between economic growth and inflation. That's not possible?
Well, first of all, we can't have a soft landing because the soft landing means we avoid recession. So by that definition, we've already crashed, or it's a hard landing. But there's no way we can have a soft landing.
We don't know for sure if it's a recession. The definition has been muddled.
Well, I don't care how the politicians want to redefine it. It is what it is. And so, you know, I'm not going to change the meaning of a word just to deny that we're not in something that we're in. But the point of that tweet is you have all these Keynesians that somehow believe that inflation is caused by economic growth. They also think it's caused by too many people working. They think there's a trade-off between unemployment and inflation. They think if there's not enough people unemployed, you're going to have more inflation. And the way to get rid of inflation is to put people out of work. All of this is Keynesian nonsense. Inflation is not caused by the private sector. It's not caused by growth. It's not caused by people working. The only people working that cause inflation are the people at the Fed who are running the printing presses or pushing all the buttons that are creating all the money. That's where inflation comes from. And they create inflation in order to monetize U.S. government debt. So the federal government runs a big budget deficit. The Federal Reserve prints up money to buy those bonds, and that inflation enters the economy. It's got nothing to do with growth or people working. As a matter of fact, in a real economy, the stronger the growth, the lower prices. Because what is economic growth? It means increased output. It means more goods and services are being produced. Well, if you increase the supply of something, then you decrease the price. So a productive economy that's producing more stuff means that the price of that stuff is lower. The same thing with people working. If more people are employed productively, their productive output is increasing the supply of goods and services, keeping the prices down. If you slow down real economic growth, if you force people out of work, you're going to have less supply. We're not going to make as much stuff. We're not going to be offering as many services. And so therefore, the prices of those goods and services, all else being equal, are going to go up.
Peter, you're right. When the economy is doing well, more people are working and there's more supply, there's more output. But you got to remember also when this happens, when the economy is doing well, there might be also more aggregate demand, which could also push prices up, right? It's a counterbalance force, is it not?
Well, wrong.
No?
You remember that supply creates demand. So if people are producing and putting goods and services into the economy, well, now they have the ability to share in that production. They've earned money helping to create stuff, and now they could spend that money to buy the stuff that they created. And so the demand that comes from real production doesn't cause prices to go up. The only kind of demand that causes prices to go up is when the government just prints money and gives it to people. And so that money is not a function of production. People didn't earn that money producing. They just were sent the money by the government. I mean, that's what happened during COVID to a huge degree. You had people who had jobs and were working to help make stuff. They went home. They weren't working at all. They weren't making anything. But now the government sent them money. They weren't earning money because they worked. They were being paid not to work. But the worst part about it was many people were paid 2 or 3 times not to work than what they earned when they were working. So now these people who weren't working at all had all this money to go and buy stuff, but they didn't help produce any stuff. That's what pushed up prices, because you had all this fake demand and no supply. You see, the proper monetary policy response to the pandemic, if everybody was going to stop working, the Fed should have shrunk the money supply, not expanded it. The U.S. government should have cut spending, not spent more. That would have balanced out supply and demand. But instead, we had the worst combination of monetary and fiscal policy probably in the history of the country. In the face of collapsing supply, we flooded the economy with phony demand. And so we're experiencing now, I think, just the beginning of those consequences. We've got a long way to go, which is why the idea that inflation has peaked is nonsense.
One way that the government plans to fight inflation is with this new Inflation Reduction Act. Hasn't been passed yet, but the legislation is supposed to authorize $430 billion of spending, $300 billion of which is earmarked for fighting climate change. Another proposition they're making is a 15% minimum corporate tax. Is this going to help, Peter?
Of course not. It's going to hurt. Historically, whenever they brand a piece of legislation, whatever the name is, the effect will be the opposite of that name. So if a bill is called the Inflation Reduction Act, then right off the bat, the effect of the bill is going to be to increase inflation. And that's exactly what it's going to do. First of all, there's all this new government spending. That's more demand, artificial demand, coming into the economy. How is the government going to get all this money that it's going to spend? Because it's not going to get it from those tax hikes. It's ultimately going to get it from the Fed. The Fed is going to have to print more money to monetize those debts. Now, even if the Fed doesn't do that, and the government has to find private buyers for those bonds, well, then the government, or rather the Treasury, has to find private buyers for those bonds. It's going to crowd out investment in the private sector. And so that's going to mean fewer things are going to be produced because the private sector is going to have less money to invest in capital and things to improve productivity. And so that ultimately causes prices to be higher. So will the increase in corporate taxes, because to the extent that corporations have to pay higher taxes, it comes at the expense of lower investment. So if corporations have less money to invest in plant and equipment and expanding supply, that ultimately puts upward pressure on prices. What the government needs to do to reduce inflation is reduce government spending. We need a bill that cuts government spending. The government is doing the opposite. They are increasing government spending. So what they're doing is they are throwing gasoline on a fire that's already burning.